Hi everyone, this is Rohit from Lifestyle Mastery, and I'm excited to have Patrick Driscoll and Ben Stokes, of the general partners at Chasing Rainbows. Patrick works in Carta as a lead product marketing manager, and Ben is an emerging fund manager with both startup and corporate experience, where he has helped LGBT founders get early access to capital. Welcome to the show, Patrick and Ben.
Yeah, thanks for having
Pleasure
us.
to be here. Yeah.
Awesome. So, you got quite a bit of an experience raising funds and being into startups. Patrick, we can start with you. How did you get into this world of startups?
For sure. Yeah. I originally started my career in international development, working with entrepreneurs in West Africa and Senegal and the Gambia with the Peace Corps, and really fell in love with empowering entrepreneurs. And that led to some time spent in South America and Colombia, eventually Mexico, before again, working with entrepreneurs and youth entrepreneurship, before ending up in Los Angeles with the US Small Business Administration, where I got the opportunity to work with financial institutions to help them streamline access to capital for brick and mortar entrepreneurs specifically. And I sat on a panel with a VC and an accelerator manager at the mayor's office in Los Angeles, and heard what they had to say about their industry, the impact they were having with just societal impact, impacting the founders with access to capital and education via acceleration, and kind of looked around at what I was doing and realized that that's exactly what I wanted to do. Was able to get a job at 500 startups shortly thereafter to run global investor education programs. So that really allowed me to learn a lot about the VC space in startups, sitting in courses at Stanford and Berkeley. Their program is called Venture Capital Unlocked. I couldn't recommend it enough. And that kind of instilled in me a desire to grow in the venture capital space. And at the same time, I started mentoring LGBTQ plus startups, which has been a huge passion of mine since I got into entrepreneurship in general, to help kind of the underrepresented community from the queer perspective. And after 500, I joined a firm called BMNT, which I ran a national security focused accelerator with a $20 million allocation of non-dilutive equity, non-dilutive money that we could give to 21 startups, which was a great experience, while simultaneously chairing some boards for StartOut, which is an LGBTQ plus startup ecosystem, continuing to mentor startups on the side, and growing an investor network. I became a venture partner at Gangels, which is an LGBTQ plus focused angel syndicate. And then finally, this past year, I joined Carta in March to run their product marketing for venture capital products. And Ben asked me to join Chasing Rainbows based off of, hopefully he'll tell the story of how we met, but based off of our experiences kind of interacting with one another over the past couple of years. In June is when I joined, and it's been, hitting the road running, hitting the ground running as much as we possibly can to raise the fund and meet founders and grow our network, etc. So it's been a fun ride.
Yeah, no, I think that's super interesting. And when you reached out to me, I thought I'm going to meet Ben, the cricketer. But Ben, what's been your story? You're an Aussie, you live in US. How do you get into the world of startups?
Yeah, well, firstly, I guess I should apologize that I'm not the cricketer, but that's okay. Hopefully I'll be able to entertain you enough with my stories in startups. But yeah, so I got into startups. I originally had my own startup actually called Social Table, which was a social dining platform. So the idea was that you could book and pay for a single seat at a group table at a restaurant as a way of meeting people. So think dining with strangers and hopefully leaving with friends at the end. During the pandemic, we pivoted a few times and then I was able to exit that company last year. And so, during that time as well, I'd been an angel investor too. And so, I'd always been investing in underrepresented founders. But what I'd noticed during my time was that there was a similar sort of, thread that was happening with a lot of the LGBTQ plus founders that I'd been investing in. And that was the fact that for a lot of them, when they'd come out, they'd lost their friends and family due to bigotry. And so, what we've done is sort of position ourselves within Chasing Rainbows to be the chosen family for all of these founders, that when they've lost them, they need somewhere to go to be able to get some early access, particularly when the first round of fundraising is literally called friends and family. And so that's where we sort of fill in that gap, essentially. In terms of, how I met Patrick, he and I have both been on the board of Startup for a number of years, but we actually met on a pitch day event when I was pitching Social Table and he was the MC on his first day back in LA after living in Mexico, actually. And so that's where we actually met, which is, I can't even remember when it was now, 2000, maybe 18 or 19. It was a while ago. I had less gray hair then. Anyway, so then we'd been sitting on the Startup board for a while, each of us, either he'd be leading or I'd be leading. And so then, we've developed this really good working relationship. And so I think that has allowed us to be able to go into this fund really well. So I come from the founder background and Patrick obviously has the LP education background. And I think it's a really good pairing for us.
Interesting. And what is the thesis of the fund? Are you only investing into LGBT founders in US, or is it, are you spread across different sectors, or is it a particular segment, or what's the thesis that you're looking at?
Yes. So exactly that. So we are investing in LGBTQ plus founder companies at the early stage. So that's anywhere from pre-seed up to Series A. And we are sector agnostic in a sense. We don't really have a particular sector or industry vertical that we're going after. We are definitely interested in a few different ones, like people who are creating financial equity or education equity or healthcare equity, and then the other one is obviously environmental and sustainability as well, which we believe is very key, as well as the future of work and things like that. But we're definitely open to different sectors, so that's not something that we really are too driven by. It's more around who are the founders, are they capable founders in terms of what they can deliver, as well. And then on the other side of that, from a location element, we are mainly focused on the US. I would say, up to 10 to 20% of our fund can be done outside of the US or invested outside the US, but the majority of it is going to be US based. And that's simply because that's the majority of Patrick and I's network is US based.
Oh, okay.
Well, fortunately for Fund 2, I was based in LATAM and have strong connections in Europe and Southeast Asia even as well. So for Fund 2, we're really hoping to raise a much larger fund and deploy capital into international markets at a higher rate. But for Fund 1, we'll likely focus for the most part on the US.
Yeah. Got it. Interesting. And Patrick, you work in Carta, and Ben right now is living in Australia. But how do you look at doing due diligence for startups if you're looking at startups in the US as well as spread across LATAM and other areas? What's your strategy and how do you do those due diligence?
For sure. Yeah, we like to bring in, so Ben and I both have our specific expertise, right? We have our experiences. Ben's a former founder. He understands the founder perspective. I've been helping VCs learn how to do their craft and hone their craft over the past couple of years. So I understand due diligence at the top level. So we can get into the nitty gritty with, go to market. How are your financials looking? What are your metrics? We understand those at that level. But when it starts getting into verticalized questions, if it's a health tech company, for example, we'll bring in a health tech expert from our network, and they'll actually sit in on the investment committee decision. We'll have an initial screening call. One of us will screen the founder to make sure that it's a good fit. The founder is savvy, understands what they're doing. We'll bring in the other one likely for the second call. The third call is when we'll bring in this technical expert after sending them all of the decks and the information in our notes. And we'll have more of a technical screening before having a final investment committee decision and having a final call with all parties involved to make the investment decision. So it's based on founder. Since they're super early stage is typically who we target. It's based on founder and founder team. So, I mean, any good investor is going to tell you that a founder could have the best idea in the entire world that's going to revolutionize things, but if they can't deploy or if they can't implement on their vision because of a lack of CEO type background, or perhaps they're not a technical founder, they're super CEO, then they need to understand that their weaknesses require either a co-founder or a strong fellow teammate. If we see somebody who's not doing that, who's not actually acting on these good instincts that we can detect quite quickly as a founder, then we'll likely not invest in them. So it's very founder driven for sure.
Yeah, there's definitely those elements of the 3 T's, right? Team, traction, and TAM. And so like, how big is the market opportunity, and what have you achieved without venture capital funding to date? And so that kind of shows us that, if you're able to problem solve and get things out to the market faster. And that's where, when you do get venture capital, that we can really help you excel that.
Got interesting. And you mentioned that you look at whether the founder has that CEO quality, but what if it's a very young founder? I was part of a company called OYO Rooms, where the founder was very young, but he doesn't have much experience. How do you do that? How do you understand? What are some of the qualities you look for a founder to make bet if he doesn't have that experience in that domain?
For sure. I think a huge indicator of a good founder is coachability. So if it is a young founder, they need to understand that they might lack the experience in how to scale a business to a unicorn status, right? They're not going to have that inherent skill in their tool belt, right? So if we can, and a good founder will know that, and they'll take mentorship, they'll take coaching from investors, from mentors that will assign them further on in the process. Once we've deployed capital, for example, we assign mentors. And the best types of young founders or founders that are first-time founders is that coachability. And if they take input and insight, and they know how to push back, right? Like we only know what we know. And if they know their industry better, then they need to be confident enough to push back on what we say. But coachability is a huge indicator for me and for investors, I would say, in general.
Yeah, then that's something that we really are really focusing on within our fund. And so we align each of the startups we invest in with a key advisor that actually has that industry expertise and knowledge as well, based on their experience. And so the idea behind that is, if it's not Patrick and I, it will be one of our key advisors that will be focused on mentoring and educating and advising that startup. And so they've got that experience as well, so they can actually ensure that they get that insight too.
Got it. Interesting. And last year, a lot of founders were taking money from funds like Tiger, who would not be on the board. They would make quick investments, but they would just be giving capital. But I wanted to understand, before you invest, how can founders know whether a VC can add value? And is it only financial capital which they're giving to the founder? But is there any other thing which a founder should know that they can add value? And what are the signs which a founder can know that VC can add value to them?
Oh, okay, cool. Yeah, so it's a hard one, right? Because you're right. The last few years, capital has been so accessible,
right.
But as a VC, and particularly at the moment when the money is tightening up in a lot of ways, it kind of works both ways. That the VC has to add value to the founders just as much as the founders have to add value to the VC's portfolio. And so the thing that we really focus on is trying to ensure that we can help the founders get to where they want to go. And so one thing that we built into our platform is this thing called the ecosystem playbook. And essentially what that allows us to do is to be able to say, okay, you're at point A today, which might be raising a pre-seed round. You want to get to point B, which is actually where you are raising your seed round. What do you need to do to be able to get there? How, and what does it take? And so we work with these founders over this period of time to actually have the 3 to 6 months, or even 6 to 12 months, to actually get them to that point where they can raise that. And so if it's a number of, if it's in the amount of traction they need to have, is it the amount of revenue they need to have, how many customers they need to have to achieve that revenue, things like that. Understanding their COGS, understanding their CAC, understanding their lifetime value. And so what we do is we actually work with the founders to put all that together and build on that, and have have capital milestones built into that process as well. And so by the end of that 6 to 12 month period, the founders can confidently raise that next round from other institutions that we have, we will introduce them to as well, because we know that they've already hit all the things that that next round of funders require from them. And so that's something that we do. I think other funds do different things as well. So it's just a matter of understanding what it is that you need the most expertise or help with. So say if you're a startup that's more product based and you don't have that many customers to date, but you're still building through your product, finding an investor who can actually help you like get to that point where your product is ready to go to market is really important as well. So yeah, I don't know, Patrick, if there's anything you want to add to that.
I love this question. I have spoken to so many founders specifically about vetting investors, because you can take that money, right? You can, but it depends on your strategy. Sometimes all you want is money. You don't need a mentor. You don't need an activist investor.
Right.
But the biggest tool, the biggest tool that founders have is the founder community, right? So relying on other founders and other startups and folks that are in your network that can tell you this investor is great, this investor is borderline questionable, rely on those folks. And then your trusted investors, you can ask them, like come to Ben and myself, right? Ask, what does this investor do in terms of value add? Is it just a check and they don't take a board seat? They don't provide any sort of value outside of capital, which again, sometimes it's what you need. But take advice from folks that have already gone through the experience. So the founder community and your investors, and just reach out. There's so many really cool communities to be a part of as a founder.
Yeah, and the other thing as well is like understanding what the VC's network is too. So if you're looking for more customers and things like that, that if the VC is able to give you those customers, that's also something that's really important too.
Right, and Patrick, you talked about founder community, and you've been part of 500 startups. Do you think a very early stage startup should look at accelerators like Y Combinator and 500 startups, or do you think other VC firms have come up with? I know Andreessen Horowitz is working on on community, but do you think other VC firms are looking at the community angle, which YC and 500 startups have nailed down?
Community is, for us at least, vitally important to what we're doing at Chasing Rainbows. At 500 Startups, community was also very important. Establishing a sense of community amongst the founders, even the team at 500, the investor community was great. And I think other VCs and in like A16Z and others are understanding the importance of community. Right. It's really up to the founder to determine what their strategy is. If they are positioned in such a way, or their product or service isn't going to require a community, then maybe it's not super important for them to do so. I'm always going to tell them to do it and say, look at the community option via an accelerator. Startout, for example, which both Ben and myself are part of, is the LGBTQ plus community that focuses in startups. Right. It's just an easy way for you to get introductions and build your network quite quickly. For accelerators in general, again, it depends on what you need, and the brand of the accelerator is quite important. So I always tell founders that I'm mentoring to really consider what you're getting out of Y Combinator or 500, or maybe a small regional accelerator in like upstate New York, for example. Understand if you're getting a good curriculum, that's fantastic. If you don't need the curriculum, you need that network, then do it anyway, because you're going to get that network. If you don't need either of those two things, but need the brand validation from a 500 or a YC, then do the accelerator because of that. So there's all these different reasons why you would want to do something like that, and you just have to understand why.
I think the other thing as well is the fact that it's lonely as a founder as well, and that whole thing is lonely at the top. And so if you're a CEO, you don't have colleagues all the time that you can actually ask questions or bounce ideas off. And so sometimes being in a community where you meet other founders is really important, because you do then have peers that you can ask questions of and things like that as well.
Yeah, and go up to the bar with and grab lunch with and complain about this crazy VC who I pitched and ghosted me. It's a good sanity check for sure.
Absolutely.
Interesting. And post investment, what strategy would you suggest to founders, and how do they extract the most from the VCs? Because founders are usually thinking that the VC would be really busy, but how should founders ask their investors for help, and what should be like the cadence? Like, should they ask them more often, or how do they leverage their network?
Yeah, I think that one thing to remember here is your success as a founder is our success as a VC. And so we want you to be successful. Like we will do anything to make sure that you are successful as well. And so in that case, you know, like we're really big on making sure that there's good communication between us and our founders. We want to make sure that we're, you know, the founders are communicating with us, that, you know, sending an update, you know, every 6 months is not good enough, right? You know, you need to be able to send updates more regularly and ask questions as well. Like, remember that your VC here is essentially here to help you be successful. So if you need an introduction, ask the VC for the introduction. Look on their LinkedIn, see if they know anyone at the place that you want to be introduced, and then ask them for that introduction. I have no problem with doing that.
Yeah, transparency is huge, and being truthful is huge as well.
Mm-hmm.
So ensuring that your investor understands where you are, what your needs are, pretending like everything is great and you have a long runway and you're not worried about anything every time you have a chat with your investor on your bi-weekly or monthly, whatever your investor update is going to do no one any favors, right? So make sure you're transparent, you're in a bind, you're running out of runway, your head of marketing just quit, your et cetera, et cetera. And once we know everything that's on the table, we want you to succeed, because to Ben's point, the success of our founders is the success of our fund. So transparency and truthfulness. And if you hide something or fib or potentially, you know, shift some numbers around to make it look better, we're going to find out eventually. And it's not going to be a good look for you, because VCs talk to one another and all that stuff. And we want to be as helpful as humanly possible. So truthful and transparent, please, for any founder listening out there.
I definitely want to back that up. Absolutely. Like Patrick said, if things aren't going so well, let us know, because we might be able to like give you some advice or some pointers on how to fix the problems that you're going through as well. Because you don't become a VC without having some experience and seeing, we see other founders as well, right? So we can always ask someone else within our portfolio what they're doing to sort of help you as well.
Got it. And you know, how do you look at giving very hard feedback to founders, but also, you know, retain that level of trust and safety, especially during these times when it looks like there's going to be a cash crunch for founders going ahead? And, you know, what mistakes do you think, you know, VCs make when they're giving feedback to founders?
I think don't be an asshole is number one. You can be constructively critical in many ways and come across as being like that trusted advisor who's going to tell you what's up. And maybe you're spending money in some way that we don't see as the smartest way to deploy capital. You're hiring the wrong person. You're spending too much money on salary, just as a quick example. So maybe go for a more junior person so you can extend your runway. You know, like but don't. What I try to do with founders is give that advice and feedback as a trusted advisor, not in any sort of critical way that's going to set up walls immediately and it's going to destroy the conversation immediately, right? So I think there's a way to do it well, and there's some great, you know, books and strategies on how to do this and have those types of harder conversations with your founders and with your investors as well the other way. So don't be an asshole would be number one.
Yeah, I agree. And I think the other thing is as well is like take the person out of it, right? It's not about the person, it's actually about, you know, the idea or the business or something like that, right? And so, or the way that the business is being done. And so I think one thing that founders sometimes have to remember, that sometimes when a VC is I guess, you know, giving that constructive criticism, it's not something personal. And so just remember to take it. It's not a personal attack. It's actually trying to work out how to fix or solve the business problems. And so I think that's really important to remember.
Got it. And what do you think is the single biggest misalignment between VCs and founders?
I think it's expectations, I guess, is the big one for me. It's often that I think that founders think that VCs have a certain expectation, and that they can't, as Patrick was saying before, can't be transparent unless they are hitting that. And so I think measures of success is something that's really important to really understand. Yes, sure, every VC wants their founder to become the next unicorn, 100%. But that's not always the case. And so just being okay with that and looking at what measures of success are, and actually, like putting those measures of success, remembering you're not going to be a unicorn if you start your business today. You're not going to be one tomorrow. It takes time to get there as well. And so making sure that you work, to understand what the expectations are and what those measures of success are at each of the stages that you're in to then become a successful unicorn at a later date is really important.
Yeah, I totally agree. I think in two quick examples or ideas around this is founders live in have a linear vision, right? They want to take their business and succeed. They have an idea on their timeline. VCs come down with a multi-portfolio vision of several companies, ideally, so they kind of have a lot of perspective on what's realistic and what's actually going to happen. And if a founder who potentially is a first-time founder has this grand vision that they're going to scale to 700% growth year over year immediately off the bat, and we know as investors that the likelihood of that happening is very minimal, and we have to be, truthful about that. So I think there's a misalignment sometimes in those two perspectives meeting and merging in the middle. And then the other one, which I was just chatting with some other investor friends this week, was the expectation of follow-on investment. Some founders think that the second they get their first check from a VC, that they're guaranteed to get a check from that VC for the remainder of their company growth. So if they get a check in pre-seed, that means you're going to get a check for their seed round, their Series A round, their B round, et cetera, and bridge rounds too. And, there's no requirement for investors to provide those checks. If we really like the company and want to allocate money for follow-on investment, then obviously that's a conversation we could have, but it's not a guarantee for sure.
Yeah, I think that's a really good point.
Correct. And I want to talk about portfolio construction. How many companies do you think are enough for a diverse portfolio? Are you looking at investing 50 to 100 companies, or do you have a set criteria of companies which you need to invest in?
Really depends on the stages you're investing in and the size of your fund. Essentially, those are the two things that kind of limit how much you can do. So, for us, our newest fund is a $10 million fund, and we're pre-seed to Series A. So we've got a certain portion of them that are like on later stage deals, and a portion of it that's going to be for earlier stage deals. And so, when we've sort of looked at those numbers, somewhere between 50 to 75-ish companies, I think we've sort of earmarked ourselves for. Again, that is across the board there. So we're going to write smaller size checks from 50K all the way up to much larger size checks at 250K.
For sure.
Yeah, so that's over a span of 3 years. Is it? Yeah.
18 months to 3 years. We hope to deploy quite quickly. We do want to raise fund 2 in the near future, since we believe that we're going to find amazing companies quite quickly, and that's what we've seen already. We've had an amazing part of what our superpower is our pipeline, and we are sourcing deals from a ton of fantastic networks, VC funds, GPs at other funds, folks that we know. We have upmarket founders coming to us for investment as well. We have amazing deal flow coming from every possible direction, which is great. And obviously we're diligencing every single one of them and having the conversations we need to have to make sure it's a good deal. But we feel like we can deploy quickly, and we're fortunate to be in that position with our access to the deals that we have access to.
Right. And is target of ownership in a startup important? Do you want to keep it above 5% or above 1%? Do you look at investment in that way?
Yeah, ownership is important. We're not going to take 20% of a company. I've been mentoring startups in their fundraising strategy for long enough to know when they get hit with like a 22% ownership grab from one investor, for example, and it's a multi-investor deal like a syndicated deal in some sort of way. So we want to be as realistic as humanly possible. We'll, take anywhere from 5 to 10%, depending on the deal and how much money we invest in the stage. But it's a conversation that we want to have with the other investors in the round and with the founder, obviously, to make sure it's the best case scenario. Because you can kill a company by taking too much ownership. And if you're de-incentivizing the founder and the founding team and even the employees from the employee pool by the investors being too aggressive, then it's a lose-lose situation for everyone.
Got it. And I want to talk about board management. Do you think boards are valuable? And when do you think the board should come in, and what can be done to improve them?
Sorry, I missed that. What was that?
I want to talk about board management. Do you think boards are valuable? And when do you think a founder should create a board? Should it be on pre-seed, seed?
Yeah, I mean, we usually start with a board, as a board of advisors, right? And then moving to a more formal board later. Usually a board comes in at that first priced round, usually, because that's what, as part of the deal, is that for them to take a board seat. And so board of advisors, I think the sooner you can get good people around you that you can learn from and help advise you, I think the better off you are. So obviously do that early. And then when you get to the point of it becoming a more formalized board, when it comes into like you're having your first price round and things like that, then that's when the lead investor will usually ask for that board seat. And that's where you set up your management board. Yeah. Or board of directors.
Got it. And I quickly want to do the top 3. What's your favorite business book?
Go first, Patrick. Go.
This is so cliche and I hate saying it out loud, but this is what I tell people anyway. It's I've read Venture Deals by Feld and Mendelsohn, I think like 7 times. It's just super useful to understand VC at the top level. It's 101. I recommend it to folks looking to break into VC.
And the one that I like is, and admittedly, I don't read that many business books. I'm more into like other style of books. But if I was thinking about a business book, I would be going after The Personal MBA by Josh Kaufman. I think that book, if you can't afford to go to an MBA school, that book is actually amazing for anybody who wants to have a look at that. And to be honest, I read that book before I did my actual MBA, and it was a super helpful tool.
Oh, wonderful. We'll put that in the show notes. And Bradford came on the show. We'll also put that in the show notes. And if you could go back in time when you started investing and you started looking at building Chasing Rainbows, what is the one thing you would have focused on or done things differently?
For me, when I started the fund, I actually, I thought about, should I just be a fund for any underrepresented founder? And the thing that I was taught very early on from some discussion points I had with some very, very reputable VCs was to focus. And that's what we've done now with Chasing Rainbows. We really focus on the LGBTQ+ community. And I kind of wish that I had have done that a little bit earlier, to be honest, because I would have been able to maybe find some earlier deals that I could have gotten on before, when I was focusing more broadly. And so I think that that's something that, it takes time to learn. You have to learn some things the hard way, but I probably would have done that a little bit sooner had I have known that.
Yeah, I love that. And for me, understanding that the emerging fund manager community, similar to the points that I've already stated about the founder community, we have an emerging manager community. And I wish I'd known earlier that I could rely on a lot of the folks I've met over the past couple of months from that community who will provide advice and input and information about the VC tech stack, which tools to use, who to go to, what events are worth it, etc. And even setting up coffees with not only LPs, right, and founders, but other emerging managers who are a part of our community to dig into their experience and see what they can provide in terms of insights and advice and that type of stuff.
Got it. And do you have any favorite online tool, for example, Gmail, Slack, Zoom?
Oh, my favorite tool in the entire world at the moment is Calendly, because I just love
that.
sending out my link to anyone and then them booking directly into my calendar without the backwards and forwards of emails, which I hate. That tool is phenomenal. That's my big one.
Calendly so nice. For Ben and I have been chatting about a CRM tool for the past couple of weeks, specifically as our conversations get more and more complicated, and that decision needs to be made probably early next week. So I can't say which one specifically we're going to use yet, but a CRM tool is 1000% worth every single payment you will make per month or annually. CRM makes the world go round.
Yeah, I do laugh that you say that should have been, that decision will be made next week. It should have been made last month. Let's be honest.
Google Sheets is coming in hot, but we're hoping to expand into an actual CRM.
Correct. Absolutely. I totally love Calendly, and I completely agree. I think CRM tool is so crucial. We'll put that in the show notes. And Patrick and Ben, what is the best way people can reach out to you and know more about Chasing Rainbows?
Sure. So we have our website, www.chasingrainbows.vc. And on there, actually, you can book in a meeting with either myself or Patrick directly into our calendar, using Calendly, actually, into our calendar to actually have a first meeting with us. There are some certain questions that we like to ask during that Calendly process. And if you meet the basis of our thesis criteria, then obviously the meeting will go ahead. If not, then we will be able to either hopefully point you in the right direction for somebody who will be able to help you, or find some or help you find the right sort of path to take.
Yeah, and we can provide LinkedIn links and all that stuff, but it's, Patrick Driscoll and Ben Stokes. We should be pretty, if you type in Patrick Driscoll Chasing Rainbows, Ben Stokes Chasing Rainbows, not the cricket player, Chasing Rainbows, you can find us pretty easily.
Correct. We'll put down in the show notes. Thank you so much for taking our time, Ben and Patrick. I really enjoyed my conversation with you.
No worries. Thanks
for sure. This is awesome. Yeah, thanks for